Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, albeit with fluctuations. The forecast price further reinforces this bullish sentiment, projecting continued growth over the coming weeks. Therefore, a long position on Bitcoin is recommended. An ideal entry price would be around $98,500, capitalizing on the current price consolidation. A stop-loss order should be placed at $95,000 to protect against potential downside risks. The target price could be set at $106,000, aligning with the forecast and aiming to capture significant profit potential. This strategy leverages the long-term bullish outlook for Bitcoin while incorporating risk management measures to ensure a favorable risk-reward profile. Based on the provided Bitcoin Cash price information, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a slight upward bias. The forecast price suggests continued upward momentum, reaching $492 in the coming week. However, the resistance level at $622.40 indicates potential for a pullback before further significant gains. Therefore, a long position is recommended. An entry price of $460, slightly below the current price, allows for a margin of safety. The stop loss should be set at $440, protecting against a potential downside correction. The target price should be $490, aligning with the forecast and allowing for a reasonable profit margin. This strategy aims to capitalize on the anticipated upward trend while mitigating risk through a well-defined stop loss. Based on the provided information about stacks, a cautious investment strategy with a short-term perspective seems most suitable. The historical price data shows a downward trend over the past 2 weeks, and the forecast predicts further declines. While the support price at $1.453 suggests a potential floor, the resistance level at $1.827 indicates a significant barrier for any upward movement. Therefore, a short position on stacks is recommended. An entry price of $1.60 would allow you to capitalize on the anticipated decline. Setting a stop loss at $1.65 would mitigate potential losses if the price unexpectedly rallies. The target price could be set at $1.47, aiming to profit from the predicted price drop while leaving room for some price fluctuation. This strategy prioritizes risk management and capitalizes on the current bearish market sentiment surrounding stacks. Based on the provided Ethereum price information, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend with both upward and downward movements. While the recent price action shows a slight decline, the forecast suggests a potential rebound towards the end of the period. This indicates a possibility for a sideways consolidation or a short-term correction before a potential upward move. Considering this outlook, a long position would be advisable. An entry price around $3,280 could be considered, aligning with the recent price action and providing a buffer below the support level. The stop loss should be set slightly below the entry price, around $3,250, to minimize potential losses. The target price could be set at $3,500, aiming for the resistance level and capitalizing on the potential upward movement predicted by the forecast. This strategy allows for capturing potential gains while managing risk through a well-defined stop loss. Based on the provided data for Ripple, a medium-term investment strategy appears to be the most suitable. The price history demonstrates a consistent upward trend, and the forecast indicates continued growth over the next week. Although there isn't readily available support or resistance price data, the historical price movement suggests a bullish sentiment. Therefore, a long position in Ripple is recommended for a medium-term investment horizon. A strategic entry point could be around $2.65, aligning with the recent price action and the forecast suggesting further upward movement. To manage risk, a stop-loss order should be placed at $2.45, effectively limiting potential losses. The target price could be set at $3.30, capitalizing on the forecast's projected price increase. This strategy aims to capitalize on the anticipated bullish momentum while mitigating potential downside risks. Given the current price trends and forecast for Binance Coin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating pattern, but the forecast suggests a consistent upward trajectory over the next week. The support price at $715.15 provides a solid foundation for potential upward movement, while the resistance at $750.11 indicates a ceiling for the immediate future. Therefore, a long position is recommended to capitalize on the anticipated price increase. An ideal entry price would be around $718, slightly above the current price and the support level, allowing for a buffer against immediate price fluctuations. A stop loss should be set at $713 to minimize potential losses if the price drops unexpectedly. The target price can be set at $735, which aligns with the forecast and offers a reasonable profit margin within a medium-term timeframe. This strategy allows for potential gains while mitigating risk through a well-defined stop loss and a realistic target price. Given the price trends and forecast for Stellar, a medium-term investment strategy appears most suitable. The historical prices show a recent dip, but the forecast suggests a potential upward trend over the next week. The current price is near the support level of $0.3919, indicating a potential buying opportunity. Therefore, an investment strategy should involve a long position in Stellar. The entry price could be around $0.425, aligning with the recent dip and the support level. The stop loss should be set at $0.405 to mitigate risk in case the price drops further. The target price could be around 51 cents, taking advantage of the potential upward movement indicated by the forecast. This medium-term approach allows for potential profit from the anticipated price increase while managing risk through a well-defined stop loss. Based on the provided information for Toncoin, a short-term investment strategy appears most suitable. The forecast suggests a slight dip in price over the next week, with the price potentially falling towards the support level. The historical price data also indicates some volatility, suggesting short-term opportunities for profit. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price, which is slightly above the predicted price of $5.48. A stop-loss order could be placed at $5.59, the highest predicted price, to limit potential losses. The target price would be set at $5.302, the support level, aiming to capitalize on the predicted price decline. This strategy capitalizes on the potential for a short-term price correction while mitigating risk with a well-defined stop-loss order. Given the price trends and forecast for Cardano, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating trend, with a recent upward movement and the forecast indicating continued growth. While the support price of $0.9459 provides a safety net, the resistance at $1.2296 suggests there is room for further price appreciation. Therefore, a long position is advisable to capitalize on this potential. An ideal entry price would be around $1.09, aligning with the current price and the forecast's initial values. A stop-loss order should be placed at 96 cents, slightly below the recent support level, to limit potential losses. The target price could be set at $1.18, aiming to capture a significant portion of the projected price increase before reaching the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses in the medium term. The current Litecoin price history shows a volatile period with fluctuations between $98 and $136. The forecast suggests a continued upward trend, reaching as high as $145 in the coming weeks. Considering the support price of $126.11 and the resistance price of $151.20, a long-term investment strategy appears promising. I recommend a long position in Litecoin, aiming for a target price of $140. This price point aligns with the forecast while leaving room for potential upside. The entry price should be around $128, ensuring a healthy margin above the support price. To manage risk, a stop-loss order should be placed at $126, protecting against unexpected price drops. This strategy capitalizes on the projected upward momentum of Litecoin while mitigating potential losses. Given the provided historical price data and the forecast for SWAY coin, a cautious investment strategy with a medium-term perspective appears most suitable. The historical prices exhibit some volatility but generally trend upwards, while the forecast suggests a slight increase in price over the next week. The support price at $4.7633 provides a potential buying opportunity if the price dips, while the resistance at $5.1251 indicates a potential ceiling for upward movement. Therefore, an investment strategy could involve entering a long position at the support price of $4.7633, with a stop loss set slightly below this level, around $4.70. The target price could be set at $5.10, aiming to capitalize on the potential price increase towards the resistance level. This strategy allows for a moderate risk-reward ratio while taking advantage of the anticipated upward momentum. Holding the position for a few weeks to a month aligns with the medium-term investment perspective. Aptos's recent price history shows some volatility, but the overall trend is slightly downwards. The forecast suggests a continued downward movement, with prices potentially dipping below the current levels. Considering this bearish outlook and the forecast, a short-term short position on Aptos appears to be the most suitable strategy. An ideal entry price for this strategy would be around $9.25, aligning with the forecasted price and allowing for some room for potential price fluctuations before entering the short position. A stop-loss order should be placed at $9.50 to limit potential losses if the price unexpectedly moves upwards. The target price for this short position could be set at $8.70, aiming to capitalize on the anticipated price decline while remaining mindful of potential support levels. This strategy focuses on capitalizing on the short-term bearish momentum of Aptos, leveraging the forecast and historical price data to guide the entry, stop loss, and target price points. Given the price trends and forecast for SAY, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a downward trend over the past 2 weeks, with the forecast suggesting further declines. The support price sits at $0.3989, indicating a potential floor for the price. However, the resistance level at $0.463 suggests that significant upward movement is unlikely in the near term. Considering these factors, a short position is recommended for a short-term investment strategy. An entry price of $0.424, near the current price, would allow you to capitalize on potential downward movement. The stop loss should be set at $0.435, slightly above the entry price, to limit potential losses. The target price should be set at $0.398, aiming to capture a portion of the anticipated decline towards the support level. This strategy aims to profit from the short-term bearish outlook for SAY while managing risk through a defined stop loss. Based on the provided Ethereum Classic price information, a cautious medium-term investment strategy appears most suitable. The recent 2-week price history reveals a slight downward trend, with the price hovering around the $25 mark. However, the forecast suggests a modest upward movement in the coming week, indicating a potential for recovery. This cautious approach aligns with the support price of $25.39, providing a safety net for potential price drops. Therefore, a long position is recommended to capitalize on the anticipated price increase. The entry price should be set at $25.50, slightly above the current price and the support level. The stop loss should be placed at $25.30 to limit potential losses, while the target price should be set at $27, aligning with the resistance level and allowing for a reasonable profit margin. This strategy balances risk and reward, aiming for a moderate return within a medium-term timeframe. The provided price information for Polygon suggests a potential short-term investment opportunity. While the historical prices show some volatility, the forecast prices indicate a slight downward trend over the next week. This, coupled with the current price being near the resistance level of $0.5166, suggests a potential for a pullback. Therefore, a short position on Polygon could be considered for a short-term investment strategy. To implement this strategy, an entry price of $0.514 would be suitable, allowing for a small margin above the current price. A stop loss should be placed at $0.524 to limit potential losses if the price unexpectedly rises. The target price could be set at 46 cents, aligning with the predicted downward movement and the support price of $0.4396. This strategy aims to capitalize on the potential short-term decline in Polygon price while managing risk through a well-defined stop loss. Given the provided price history and forecast for AEVO, a short-term bearish strategy appears to be the most suitable approach. The historical price data reveals a consistent downward trend, with recent prices hovering around the lower end of the range. The forecast also projects a continued decline in the coming week, further supporting a bearish outlook. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, around $0.335. The stop loss should be placed above the recent high of $0.362 to limit potential losses if the price unexpectedly rebounds. A target price of $0.300 could be considered, aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the prevailing bearish sentiment and the forecast projection of a lower price trajectory. Based on the provided optimism price data, a cautious investment strategy focusing on the short term seems most suitable. The recent 2-week price history demonstrates a downward trend, with the forecast suggesting continued decline. The price currently sits near the support level of $1.784, indicating a potential for a bounce. However, the forecast prices hover around $1.87 for the next week, suggesting a limited upside potential. Therefore, a short position with a conservative approach is recommended. An entry price around $1.90 could allow for capturing potential downward movement. A stop loss at $1.96 would help mitigate risks if the price unexpectedly reverses. The target price could be set at $1.78, aligning with the support level and aiming for a moderate profit. This strategy prioritizes risk management and capitalizes on the short-term bearish outlook indicated by the price data and forecast. Given the price trends and forecast for STRK, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a recent downward trend, with the forecast indicating further declines. The support price at $0.4111 suggests a potential floor for the price, while the resistance at $0.4689 presents an obstacle for upward movement. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.435 aligns with the current price and recent forecast, allowing you to enter the trade while minimizing risk. The stop loss should be set at $0.448 to protect against any unexpected price surges. The target price should be set at $0.415, slightly above the support price, allowing you to take profits before the market potentially rebounds. This strategy aims to capitalize on the short-term price decline while managing risk effectively. Given the price trends and forecast for Solana, a medium-term investment strategy appears to be the most suitable. The historical prices demonstrate a fluctuating pattern, while the forecast suggests a gradual upward movement. The current price sits near the support level of $206.99, indicating a potential buying opportunity. The resistance level of $230.53 suggests that there is room for growth, but the price might encounter some resistance before reaching that level. Therefore, a long position is recommended for a medium-term investment strategy. An entry price of $208 could be considered, aligning with the forecast and providing a buffer above the support level. A stop loss at $205 would limit potential losses, while a target price of $225 would allow for capturing a reasonable profit before the price potentially faces resistance. This strategy aims to capitalize on the expected upward momentum while managing risk effectively. Based on the provided information for Jupiter, a cautious investment strategy with a medium-term perspective seems most suitable. The 2-week price change shows volatility, with a recent decline towards the support level of $0.772. While the forecast indicates a continued downward trend for the coming week, it's essential to consider the potential for a bounce from the support level. Therefore, a long position could be considered with a conservative entry price around $0.785, slightly above the support level. This allows for some margin of safety while aiming for a potential upward reversal. A stop-loss order at $0.770 would protect against further price declines, while a target price of $0.850, aligning with the recent highs, would capitalize on a moderate price recovery. This strategy acknowledges the current bearish sentiment while seeking to capitalize on potential short-term opportunities within the medium-term timeframe. Given the price trends and forecast for render, a short-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating pattern, with recent dips towards the support level of $6.978. The forecast suggests a continued downward trend, with prices potentially reaching $7.65 within the next week. This bearish outlook, coupled with the proximity to the support level, presents a compelling opportunity for a short position. To execute this strategy, an entry price of $7.30, slightly above the current price, would be prudent. This allows for a small buffer against immediate price fluctuations. A stop-loss order should be placed at $7.54, slightly above the entry price, to limit potential losses. The target price would be set at $7.04, aligning with the lower end of the forecast and the support level. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop-loss. Based on the historical price data and the provided forecast for Solana name service, a short-term bearish strategy appears to be the most suitable approach. The price has shown a downward trend over the past 2 weeks, and the forecast suggests further declines in the coming week. While the support price at $0.2103 provides a potential floor, the resistance at $0.2441 indicates limited upside potential. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, around $0.228. A stop-loss order should be placed above the recent high, at 24 cents, to limit potential losses. The target price could be set at 21 cents, slightly above the support level, allowing for a reasonable profit margin before the market potentially bounces back. This strategy capitalizes on the anticipated downward price movement and aims to generate short-term profits within a week. Based on the provided Doge-Coin price history and forecast, a short-term investment strategy appears most suitable. The recent price action demonstrates volatility, with fluctuations both above and below the current price. While the forecast suggests a slight upward trend, the historical data reveals a lack of consistent momentum. This suggests potential for short-term gains by capitalizing on price swings within this volatile range. An entry point around $0.375 would allow for participation in a potential upward move, while offering a reasonable margin of safety below the recent highs. A stop-loss order placed at $0.365 would limit potential losses if the price reverses direction. The target price could be set at $0.405, aiming to capture a significant portion of the anticipated upward movement. This strategy acknowledges the inherent risks associated with short-term trading in a volatile asset like Doge-Coin, but seeks to capitalize on short-term price fluctuations. Given the provided price history and forecast for PEPE, a short-term investment strategy appears most suitable. The historical prices show a recent decline, with the forecast indicating further drops in the coming week. This suggests a bearish outlook in the short term. Therefore, an investment strategy focusing on a short position in PEPE is recommended. A suitable entry price would be around $0.0000189, aligning with the forecasted price. To manage risk, a stop-loss should be set at $0.0000193, slightly above the current price and the support level. The target price should be set at $0.0000175, aiming to capture potential downside movement before the price potentially finds support at the lower levels. Based on the provided SHIB data, a short-term investment strategy appears most suitable. The recent price history shows some volatility, but the forecast suggests a slight upward movement over the next week. However, the price is currently close to its resistance level of $0.0000322. This suggests that a further significant price increase might be unlikely in the short term. Therefore, a long position is not the most prudent choice. Instead, consider a short-term strategy with a short position. An entry price around $0.0000243, aligning with the current price, would be appropriate. Set a stop loss at $0.0000240 to minimize potential losses if the price unexpectedly rises. A target price of $0.0000225, slightly below the forecast average, allows for potential profit-taking while considering the possibility of a slight price pullback. This strategy capitalizes on the potential for a short-term price correction while managing risk effectively. Based on the provided data for Dog with Hat, a cautious short-term investment strategy appears most suitable. The recent 2-week price history shows a declining trend, and the 1-week forecast projects further downward movement. While the support price sits at $1.859, the forecast suggests the price could drop to as low as $1.69. This indicates a bearish outlook in the short term. Therefore, an investment strategy involving a short position is recommended. A prudent entry price would be around $1.78, aligning with the current price and the forecasted downward trend. To manage risk, a stop-loss order should be placed at $1.88, slightly above the current price and the resistance level. The target price could be set at $1.65, capturing potential profit from the anticipated price decline. This strategy allows for capitalizing on the short-term bearish momentum while minimizing potential losses. Given the price trends and forecast for Doge-Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines in the coming week. The support price of $0.006149 suggests a potential floor for the price, while the resistance at $0.006575 indicates a ceiling for upward movement. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $0.00644 aligns with the current price and the forecast, while a stop loss at $0.006575 would limit potential losses if the price unexpectedly rises. A target price of $0.00615, slightly above the support price, allows for capturing profits before the price potentially rebounds. This strategy aims to capitalize on the short-term bearish momentum while managing risk effectively. Based on the provided near-protocol price information, a short-term investment strategy appears to be the most prudent approach. The historical price data shows a recent decline, and the forecast suggests further downward movement in the coming week. While the support price at $4.754 offers a potential floor, the resistance at $6.891 indicates a significant barrier to upward movement. Therefore, an aggressive short-term strategy would involve entering a short position at the current price of around $5.17. A stop loss could be placed at $5.33 to limit potential losses if the price unexpectedly rebounds. The target price would be set at $4.90, aiming to capitalize on the forecasted decline while remaining conservative. This strategy leverages the potential for short-term price fluctuations and aims to generate profits within a relatively short timeframe. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $9.79. The forecast suggests Internet Computer could remain relatively stable in the coming week, with prices oscillating around $10. This indicates a sideways movement in the short term, making a short-term neutral position the most suitable strategy. For an aggressive short-term investment strategy, an entry price of $10.10 could be considered, aligning with the forecast. The stop loss should be set at $10.30 to protect against any unexpected price surges. The target price should be set at $9.80, allowing you to take profits before the market hits major support at $9.79. This strategy aims to capitalize on potential minor price fluctuations within the sideways movement, but it's crucial to manage risk effectively due to the uncertain price direction. Injective shows a fluctuating price trend over the past 2 weeks, with a slight downward bias. The forecast suggests a stabilization around $23, indicating a potential period of consolidation. Considering the support price at $24.49 and the resistance at $27, a short-term investment strategy could be implemented. A long position would be suitable for this scenario. The entry price could be set at $23.50, slightly above the current forecast and below the resistance level. A stop loss could be placed at $23 to minimize potential losses if the price drops. The target price could be set at $25, aiming for a modest gain as the price potentially moves towards the support level. This strategy capitalizes on the expected price consolidation and offers a balanced approach to risk and reward. Based on the provided price history and forecast for BTC, a cautious investment strategy leaning towards the short term is recommended. The recent price history demonstrates a downward trend, with the forecast suggesting further declines in the coming week. The support price at $417.80 indicates a potential floor for the price, while the resistance at $554.10 suggests an unlikely upward surge in the near future. Given this outlook, a short position appears to be the most suitable strategy. To implement this strategy, an entry price of $440 could be considered, allowing for some buffer from the current price. The stop loss should be set at $450 to minimize potential losses if the price unexpectedly rises. The target price could be set at $420, aiming to capitalize on the anticipated decline while avoiding excessive risk. This strategy focuses on taking advantage of the short-term bearish momentum while minimizing potential losses. The current price trend of THETA network, as indicated by the historical price data, shows a period of consolidation with some minor fluctuations. While the forecast suggests a slight upward movement in the coming week, the price range remains relatively narrow. Considering this, a short-term investment strategy with a focus on capitalizing on minor price fluctuations appears most suitable. A long position could be considered with an entry price around $2.40, the current price level. A stop-loss order should be placed below the recent support level of $2.386 to minimize potential losses. The target price could be set at $2.53, aligning with the recent resistance level and the upper bound of the forecast price range. This strategy aims to capitalize on a potential short-term upward movement while managing risk effectively. Given the price trends and forecast for WorldCoin, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $2.177. The forecast suggests a continued decline, with prices potentially reaching as low as $2.15 in the coming week. However, the resistance level at $2.605 indicates a potential for a rebound in the medium term. Considering these factors, a short position is advisable for a short-term investment strategy. An entry price of $2.22, slightly above the current price, would allow you to enter the trade as the price potentially dips towards the support level. The stop loss should be set at $2.28 to protect against any unexpected price surges. The target price should be set at $2.15, aligning with the forecast and providing a reasonable profit margin before the market potentially rebounds. This strategy aims to capitalize on the short-term downward momentum while mitigating risk with a well-defined stop loss. Based on the provided information for Hooked Protocol, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a downward trend, with the recent price hovering near the support level of $0.3532. The forecast indicates further declines, suggesting a bearish outlook in the short term. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price, around 36 cents. The stop loss should be set at $0.379, slightly above the recent price highs and the forecast's highest point, to minimize potential losses if the price unexpectedly surges. The target price could be set at 35 cents, aiming to capitalize on the anticipated price decline towards the support level. This strategy aims to capitalize on the short-term bearish momentum while managing risk through a well-defined stop loss. Artificial Superintelligence Alliance exhibits a downward trend based on the 2-week price change. The forecast also suggests further declines, indicating a bearish outlook for the short term. Given the price information and the forecast, a short position is the most suitable strategy to capitalize on the anticipated decline in prices. A conservative entry price of $1.37 aligns with the forecasted price and allows for potential profit as the price moves towards the support level. To manage risk, a stop loss should be set at $1.41, slightly above the entry price, to protect against unexpected price surges. The target price should be set at $1.25, below the support price, to maximize potential profits. This strategy aims to profit from the anticipated downward movement of Artificial Superintelligence Alliance in the short term. The strategy focuses on a short-term investment perspective, capitalizing on the expected price decline. By entering a short position at $1.37 with a stop loss at $1.41 and a target price of $1.25, the strategy aims to minimize risk while maximizing potential returns. Given the price trends and forecast for Polkadot, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, but the forecast suggests a period of consolidation or potential minor dips. The support price of $6.405 provides a safety net, while the resistance of $7.711 indicates that significant upward movement may be limited in the near term. Considering these factors, a long position is advisable with a conservative approach. The entry price could be set at $6.70, slightly above the recent price action and below the resistance level. The stop loss should be placed at $6.45 to protect against a significant drop towards the support price. The target price could be set at $7.30, aligning with the higher end of the forecast and allowing for potential profit before encountering the resistance. This strategy allows for a measured approach, capitalizing on potential upside while mitigating risk in a market that appears to be consolidating. Based on the provided data for Filecoin, a medium-term investment strategy appears most suitable. The historical price data shows a slight downward trend, but the recent price movements suggest a potential for a reversal. The forecast price indicates a gradual increase over the next week, reaching a peak around $5.89. This suggests a bullish outlook in the short to medium term. Considering this, a long position in Filecoin is recommended. The entry price should be set at $5.25, slightly below the current price, allowing for some room for price correction before entering the trade. The stop loss should be placed at $5.15 to limit potential losses in case the price continues to decline. The target price should be set at $5.85, aligning with the forecast peak, allowing for a reasonable profit margin. This strategy capitalizes on the potential for price appreciation while managing risk effectively. Based on the provided Conflux price data, a short-term bearish investment strategy is recommended. The 2-week price history shows a consistent downward trend, and the forecast indicates further declines. The current price is near the support level of $0.1773, suggesting a potential bounce, but the overall trend is bearish. Therefore, a short position is advisable to capitalize on the anticipated price decrease. A suitable entry price would be around $0.178, aligning with the current price and the potential for a short-term bounce. The stop loss should be set at 18 cents to limit potential losses if the price unexpectedly rises. The target price could be around 16 cents, aiming to capture a portion of the anticipated price decline. This strategy prioritizes capital preservation and aims to profit from the short-term bearish momentum in Conflux. Given the Ethereum name service price history and the one-week forecast, a short-term investment strategy appears to be the most suitable approach. The price has shown recent volatility, oscillating between support and resistance levels. While the forecast suggests a slight upward movement, the price action in the past 2 weeks indicates a potential for consolidation or even a minor pullback. Therefore, a short position with an entry price around $33.50 would be advisable. The stop loss should be placed at $34.50 to limit potential losses if the price unexpectedly rises. The target price could be set at $31.50, aiming to capitalize on a potential dip towards the support level. This strategy capitalizes on the short-term uncertainty and potential for a slight price correction. Given the price trends and forecast for Avalanche, a cautious investment strategy would focus on a short-term approach to capitalize on the potential for price consolidation. The historical prices show a recent downward trend, with the current price hovering near the support level of $35.29. The forecast suggests a continuation of this downward trend, with prices potentially reaching $39. However, the resistance level of $42.89 indicates a potential ceiling for further declines. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $38.50 would allow you to enter the trade near the predicted low point of the forecast while minimizing risk. The stop loss should be set at $39.50 to protect against any unexpected price recovery. The target price should be set at $35.50, aligning with the support level and allowing you to take profits before the market potentially bounces back. This strategy aims to profit from the short-term price volatility while mitigating risk through a well-defined stop-loss order. Given the price trends and forecast for Vecane, a medium-term investment strategy appears most suitable. The historical prices show a recent dip followed by a slight uptrend, with the current price hovering around the support level. The forecast predicts a continued upward movement, suggesting a potential for Vecane to climb towards its resistance level. Therefore, a long position is recommended to capitalize on this potential price increase. A conservative entry price would be around $0.048, allowing you to buy in at a relatively low point within the current uptrend. The stop loss should be placed at $0.045 to minimize potential losses if the price drops unexpectedly. The target price could be set at $0.057, aiming to profit from the predicted price surge towards the resistance level. This medium-term strategy allows for potential growth while mitigating risk through a well-defined stop loss. Based on the provided information for PENDLE, a short-term bearish investment strategy is recommended. The 2-week price change shows a downward trend, and the 1-week forecast predicts further declines. While the support price sits at $3.714, the resistance at $4.874 suggests limited upward potential. Given these factors, a short position appears to be the most suitable strategy to capitalize on the anticipated price decrease. To execute this strategy, an entry price of $4.33, the current price, would be appropriate. A stop-loss order should be placed at $4.50 to limit potential losses if the price unexpectedly rises. The target price could be set at $3.70, aligning with the support level and offering a reasonable profit margin. This short-term strategy aims to leverage the predicted downward price movement of PENDLE within the next week. Given the current price trends and forecasts for the sandbox, a medium-term investment strategy appears most suitable. While the 2-week price change shows some volatility, the forecast suggests a gradual upward movement over the next week. The support price of $0.6087 provides a solid foundation for potential price increases, while the resistance at $0.699 indicates a ceiling for immediate growth. An entry price of $0.625 aligns with the forecast and sits comfortably above the support level, minimizing the risk of immediate losses. To protect against potential downturns, a stop-loss order should be placed at $0.6087, just below the support price. This ensures that any losses are limited if the price unexpectedly drops. The target price should be set at 69 cents, aiming to capitalize on the potential for growth towards the resistance level. This medium-term approach allows for a balance between risk and reward, taking advantage of the forecast's upward momentum while mitigating potential losses. Decentraland shows a recent downward trend with the forecast indicating further declines. The historical prices demonstrate volatility, with both support and resistance levels present. Given these factors, a short-term bearish strategy appears most suitable. To execute this strategy, we recommend entering a short position at the current price of around $0.521, slightly above the forecast price of $0.525. The stop loss should be set at $0.534, the recent high, to limit potential losses if the price unexpectedly rises. The target price could be set at $0.476, the recent low, aiming to capitalize on the anticipated downward momentum. This strategy focuses on a short-term profit opportunity by leveraging the predicted price decline of Decentraland. Given the current price trend and forecast for ENG coin, a cautious investment strategy would focus on a short-term approach. While the historical prices show some volatility, the forecast suggests a potential decline in the coming week. The price is currently hovering near the support level of $0.209, indicating potential for a further drop towards the lower end of the forecast. Therefore, a short position is advisable to capitalize on the anticipated decline. An entry price of $0.213 aligns with the current price and allows for some buffer before entering the short position. A stop loss at $0.217 would protect against any unexpected price surges, while the target price should be set at $0.204, slightly above the lowest forecasted price, ensuring profits are secured before the market potentially hits major support. This strategy prioritizes risk management while aiming to profit from the anticipated downward price movement. Based on the provided information for Uniswap, a short-term investment strategy appears most suitable. The recent 2-week price history demonstrates a slight downward trend, with the forecast indicating continued stability around the $14 price level. This suggests a potential for limited upside movement in the near future. Therefore, a short position is recommended. An entry price around $14.80 would allow for capitalizing on the expected price stability while minimizing risk. A stop-loss order should be placed at $15 to protect against any unexpected upward price surges. The target price could be set at $14, aiming to capture potential profit from the predicted price consolidation. This strategy prioritizes capital preservation while seeking modest returns within a short time frame. Given the price trends and forecast for Chainlink, a short-term investment strategy appears most suitable. The historical prices show Chainlink fluctuating around the $23 mark, with the recent forecast suggesting a slight upward movement towards $26. While the support price is at $23.73, the resistance is at $29.32, indicating a potential for further price growth within the short term. Therefore, a long position is recommended to capitalize on this potential. The entry price should be around $23.50, allowing you to enter the market at a relatively low point. The stop loss should be set at $23.20 to minimize potential losses if the price drops unexpectedly. The target price should be set at $25.50, aiming to capture a significant portion of the potential upward movement within the short term. This strategy takes advantage of the current market sentiment and the projected price trajectory for Chainlink, offering a potential for healthy returns within a limited time frame. Given the price trends and forecast for Aave, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a recent upward trend, but the forecast suggests a period of consolidation before further potential growth. The support price of $309.73 provides a solid foundation, while the resistance at $371.30 indicates that significant upward movement might be limited in the near term. Therefore, an investment strategy focusing on a long position is recommended. An entry price of $315, slightly above the current price and close to the support level, would allow you to enter the market at a potentially favorable point. The stop loss should be set at $309.73, protecting your investment from any significant downward price movements. The target price could be set at $340, aligning with the forecast and providing a reasonable profit margin. This strategy allows you to capitalize on the potential for upward momentum in Aave over the medium term while managing risk effectively. Based on the provided price history and forecast for EOS, a medium-term investment strategy appears most suitable. The historical price data shows volatility, but there's a general upward trend. The forecast indicates continued upward momentum, with prices potentially reaching $1.01 in the coming weeks. This suggests a bullish outlook for EOS in the medium term. Therefore, a long position is recommended. An ideal entry price would be around $0.936, slightly below the current price, allowing you to buy at a potentially lower point. A stop-loss order should be placed at $0.9107, the support price, to limit potential losses. The target price could be set at $1.01, the highest forecasted price, aiming to capitalize on the full potential of the upward trend. This strategy balances risk and reward, allowing you to participate in the potential growth of EOS while protecting against significant price drops. Given the price trends and forecast for Tron, a short-term investment strategy appears most suitable. The historical prices show a downward trend, with the forecast suggesting further declines. Although the current price is near the support level of $0.2404, the resistance at $0.2547 suggests limited upside potential. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at $0.249, the highest price in the recent forecast. A stop loss should be placed at $0.2547, above the current resistance level, to protect against unexpected upward movements. The target price could be set at $0.233, aligning with the lowest price point in the historical data and the forecast. This strategy aims to profit from the potential price decline while minimizing risk through a well-defined stop loss. Based on the provided data for Suncoin, a short-term investment strategy appears to be the most suitable approach. The recent price history shows a downward trend, and the forecast predicts further declines in the coming week. While the support price sits at $0.02062, the current price is significantly above this level, suggesting a potential for further downward movement before finding support. Therefore, a short position on Suncoin is recommended. An aggressive entry price would be around $0.0235, aligning with the current price and the forecast. A stop-loss order should be placed at $0.0242 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.0214, aiming to capture a portion of the anticipated decline. This strategy capitalizes on the short-term bearish outlook for Suncoin, aiming to profit from the predicted price drop.